All right, fourth round. You guys finished. Who won, do you think? No guesses? Man. No guesses. Digby, maybe. Yeah, I haven't plugged it in yet, so we'll take a look at it. I'll let you guys. Of course, this sometimes takes a little time, but not too bad. So, take a look at the selected statistics here. We're getting some good productivity. You guys are finally, or everybody's finally investing some money in human resources, which is kind of cool. Fourth round. Here we go. Maybe here we go. Come on. Golly. Yeah, it wasn't a real runaway. I mean, other than the computer teams. Again, they seemed to really kind of dominate. Would Ferris have a huge sales? What were they, 200 and some million or something like that? So, well, this is not being real fun here, so we'll try it again. So you guys haven't yet here in the practice rounds really started kicking butt on the computer teams by any means. I hope that you'll turn that around in the competitive rounds, and I'm confident that you will. Well, it's not wanting to do it, so come on. What a pain this can be sometimes. I guess in the future I'll have to do this ahead of time. I always don't mind waiting because then it's a little more suspenseful for you guys, but if this is going to be this slow, I'll come back and look at it here in a bit. Let's go look at last week's homework just to kind of see what some of the answers would have been there. And again, I'm going to push you a little bit. I want you guys to start digging a little deeper. Don't just look at the superficial answers. You got to start digging around a little bit more and finding things that are true causes, right? Number one was how did Chester achieve the highest contribution margin? You know, if you looked at things, and I know I saw some folks answered that, well, they had lower variable costs, and the truth was, no, they didn't have lower variable costs. If you looked at a per item basis, their variable costs were actually relatively high. Okay? Their variable costs were actually relatively high. So the main reason was they had relatively high prices. Now, they did moderate their variable costs a little bit with some TQM, and they moderated their labor costs a little bit because they didn't have overtime. Okay? But mainly, if you looked at it, what was their big cause for having a reasonable contribution margin was the relative higher prices, and they weren't huge compared to the other teams. But if you just looked at it product by product or segment by segment, you know, they had an extra 50 cents here or an extra $1 there, and those things tend to add up, right? They add a few percentages, and those few percentages can be huge, as we've kind of talked about. So I'm going to try this one more time and see if I can get this thing to work. Okay, while I'm waiting. Question 2 is Digby sales were about 30% higher. Good. I don't mind you popping me back there if you're going to do something. Digby sales were about 30% higher than Chester, and yet Chester had more net income. What were the factors that contributed? And here I want to show you. Going to screw me up a little bit here, but that's all right. So let's go take a look at the Comp XM, or not the Comp XM, I'm sorry, the Courier. Oops, let's take a look at the third round. And I think I gave you the hint that where you're going to find that is down here on the income statement, because it's a question about income, right? So if I scroll down here, there's the income statement, and I was comparing Chester and Digby. Okay, so let's go down, and some of you put variable costs. Well, again, variable costs don't really count, not in an overall sense. Okay, it's as I would tell you, if you went up and you looked at the individual items, I think variable costs were probably higher per item, per segment for Chester than they were for Digby, perhaps, right? Now Chester did have a little higher pricing, so that was probably a good thing. Okay, so these are relative, but what I'm looking at are these things, right? Digby had much higher depreciation, $3.5 million there. Digby had roughly $5 million more in SG&A. Okay, so we're at $8.5 million, right? Digby had another $800,000 more in other fees, write-offs, TQM in this case is what that was. You want to go look. And they also had almost twice as much. It is twice as much. They had twice as much interest expense as did Team Chester. Okay, and so those were the things. Depreciation, SG&A. You just go right down the line. I just put them in order, right? Okay, the things that caused that. Okay. These are things that you're going to analyze if you're in a business sense and you want to see why your team's doing better or worse or what's happening, what types of things are really important, etc. So, question 3, Andrew spent or maybe invested $200K or $2,000K, $2 million on TQM. TQM is an expense, right? So that's an absolute expense, and we're going to look at some stuff I think here for round 4 that I'll take a look at some differences between expenses versus other investments. Okay, what was Andrew's after-tax cost of that expense or investment? What's your tax rate? It says in the guide actually, but you guys know. If you don't know and you haven't read the guide, is there a way you can figure it out? Sure. You can go right to the income statement, just where we were, and you could take, you've got your interest or earnings before interest and taxes. You take off the interest, and then you'd have your earnings before taxes, and then you'd have your taxes. So you could take, in this case, 9.1 million minus 5.2 million. So what's that? About 3.9 million. Get the actual numbers. Divide that by, divide 1.35 million by that. What you'll end up with is 35%. Okay, so your tax rate's 35%, but that is in your guide. Okay, so you don't even have to do the calculation. So if my tax rate's 35% and I expense something, what does that make my after-tax cost? I can take off that 35%. In some ways, we even say when you're in the business world or whatnot, or even in the private world, you say, kind of like putting money in your IRA or something like that, where you might get tax deduction. Say the government's paying for a certain part of that, right? And in essence, they are. So if I use the 35%, my math then is pretty easy, right? 35% of 2 million is 700,000, and so my after-tax cost is actually $1.3 million. Okay. Lastly, number 4, what percent of the market did Chester leave on the table in the size segment? I think this week's assignment, I'm going to get you guys doing even a little bit more math, maybe on this one. Okay, but what percent of the market did Chester leave on the table? This simple lookup, right? It's towards the bottom down here. What did I say in the size segment? And Chester. So size is the second to the last column here. So they potential or actual was 14.7. Their potential was 20. So they left 5.3% of the market share of the market on the table. They could have sold 5.3% more, right? If we wanted to go and do the math a little bit more, it'd be 5.3% of 3.3 million items, right? So they could have sold 165,000 more items at $35 or whatever the price was, right? Okay, so just doing the math real quickly there, that's what they left on the table, was that 5.3%. So, okay, let's go back. God darn it, I don't know why this thing is not wanting to cooperate and do the work that I want it to do. If it doesn't, we'll just have to go on, and then I'll try it one more time here. Come here. See if this works. It is just refusing to paste for me. Sorry about that. I'll just, I might have to send that out to you. We'll take a look. We can make some speculations. We had one guess that it was Digby. We can make some speculations about who won. That would be my guess too, but I was sure hoping that I could plug the numbers in right here, and we could
you highlight that section and then Control B.
Highlight the section where I want it to show up. We can give that a try. That's the part that it wants to copy from now, so let's go back, try this.
Click Control C, now hit Control C.
There's Control C.
And now go Control B.
Control B.
Yeah. V.
V
Yep.
as in Victor. Well, it's spinning, so we'll see here. Keep our fingers. Hey, all right. A lesson learned. Thank you. All right. I need to learn some of these shortcuts, so thank you. It's a great thing about being a teacher is you get to learn lots of stuff. So, okay, let's go. And these other ones usually work pretty well, so let me get that information for round 4. Financial stats, just because this set of numbers, oops, isn't as big, I think, so it usually works pretty well. Oh. Okay. And then the stock market summary. Okay, now we can go down and we can actually see who won. I think I'll hit my save so I don't lose it. I think the computer team's probably kicked butt, but we'll see. Ferris got 30 points. Erie 27, Digby 24 for earnings per share. ROE, Ferris 25, Erie 22.5, Digby 20. So Digby's doing the best so far. It looks like Andrews had the next best earnings per share and ROE. Contribution margin, Erie, interestingly. And stock price change, Erie had the best stock price change. Profits was Ferris, followed by Erie and Digby. And cash flow, Digby had the best cash flow. So of the student teams, look at that, Erie. Actually, Digby even beat Ferris, surprisingly. Wow. Oh, because Ferris got a 0 for strategy, which probably just was a mistake. So Ferris would have actually been the best, but just barely over Erie. And of the student teams, Digby is leading. We'll see if they get any deductions, though. They'd have to have 2 deductions, so. And they have none. Only Andrews and Baldwin had deductions, both for working capital. We have to go up and see. My working capital limit's $20 million. Working capital, and they're at $2 million, $11 million. Okay, so not much in working capital there. So, okay, let's go back then and take a look at what happened this round and a couple things. Then we'll look at next week's assignment. Okay, so sales again. Look at that, Ferris all the way up to $278 million. Okay, why is Ferris getting good sales compared to the rest of you? Bobby shaking her head. 3 times what you guys had, roughly, right? Yeah. Where they get, I mean, how are they doing it? It's all, you know, keep things relatively simple. Okay, it's easy to get a little bit carried away, but it's all about customer buying criteria, right? And then a little bit in marketing and some of those other things, but you really have to meet that customer buy. If you go down and you compare what the sales are happening within segments, you know, what you'll see is that the team that's most closely getting that customer buying criteria is doing the best. Okay, now, that said, if 2 teams are pretty close in that regard, and one team spends more money on marketing, obviously they're going to have an advantage there, right? Okay. But in this case, you know, I can go down here, I can just go down to the perceptual map, way down here at the bottom, and I can look at that and I can say, how is Ferris getting so much in sales? Boom, it's right there. It's obvious. Okay. I just look at the perceptual map. Nobody's even competing with them on where they're at on the perceptual map, right? Okay. Because they're a high-end team, right? They're competing, especially in the high end. Okay, high performance and size. When I talk about high end, I mean those 3 products: high performance and size. Okay, they're also, even though their products here are kind of dragging along, you know, they're still actually getting a few sales. You know, that's kind of a cash cow for them, those low and traditional end. It kind of looks like their traditional end product's going to end up in the low end. My guess is they're just going to let their low end one go by the wayside, take advantage of it while it still sells some. You know, the traditional one will go into the low end and they'll sell it for another 3-4 years, 5 years, whatever it is, while it still exists there as a low end product. And in the meantime, they might introduce even some more products up here. Who knows? Okay, and we might not know that until the competitive rounds and we see what goes on. Okay. By the way, in the competitive rounds, the computer teams are going to do the same things roughly that they're doing now. Okay, their strategy doesn't change. You guys have an opportunity to change your strategy if you want. Okay, I don't care. You can change your strategy when we switch. You need to let me know so I know what your strategy is going to be, just so I can kind of keep track of that. But I can look at that and say, wow, okay, it's a little less obvious for Team Erie, you know, the other computer team, only because their products are sitting down here, right? They're all in the traditional and low end, and you can't hardly make them out on the perceptual map. But on the other hand, I can go up and I can look here, and I can see what they're doing. Low, low, traditional, traditional, you know, boatloads of products that they're making. They've got lots of capacity in those areas, and they have obviously spent a lot of money on automation in order to lower their labor costs, which they have done fairly successfully. Okay, egg is working its way down. That was probably a high-end product, and you know, it's just into the traditional, so it's going to take them some time to get their costs down on that one probably. Okay, but they're working on that, it looks like, pretty diligently. So an EAT was their traditional product that's now in the low end. They're probably waiting until it gets a little bit older, right? As it gets older, its costs are going to go down a little bit. Okay, all those things. So, okay, so there's sales. Digby actually had more sales than Erie, mostly because Digby has a little broader approach than Erie. Erie's obviously only in those 2 segments. EBIT, both Erie and Ferris, though. So we know that Erie had a much higher contribution margin even than Ferris, right? Yeah, but Digby's contribution margin has really crept up nicely here this round. Okay, they were in the 20s last round, I think, and they got up to 34. So they've done some things, and we'll take a look at some of the stuff that they've done in order to get that kind of contribution margin. Okay, and they've also done some things for next round. But we're going to have an interesting comparison between what they've done and what Chester, I believe, has done for next round. So we'll take a look at that. And if I was one of the other teams, I'd really want to know. Really high SG&A to sales for Team Baldwin. Again, my guess is not so much because they spent more, but because their sales are relatively low. Okay. Andrews doesn't have a real high SG&A to sales, you know, relative to some of these other teams. And their sales, so they must have spent quite a bit less actually than Baldwin when it came to SG&A to sales. Relatively small contribution margin, and Interestingly, and Digby, I don't know about this tactic, but Digby has increased the number of shares still outstanding. So they're still in the process of selling stock and raising money, okay, in selling stock. How much money did they make? Let's take a look here. Their profits were $7.6 million. Andrews only made $3 million, so their profits were double, but their earnings per share was $2.27, and Andrews was $1.52. So their earnings per share were, certainly not double or even close to double what the earnings per share were for Andrews, right? And I didn't. How about ROE? We didn't even look at the ROE. I'm sorry. 5.1 versus 8.2. So again, a long ways from double, even though their profits were actually quite a bit more than double, right? Their profits were 2.5 times bigger, and yet their ROE was only 40% bigger. So some interesting. Oh, that's 60% bigger. I'm sorry. Stock prices. We could get a buy on Baldwin. We can buy Baldwin for $1 a share. And no, there are no mergers or acquisitions in this game. I'm sorry. So you guys can't buy up Baldwin in their capacity and stuff. So, yeah. Borrowing, Erie and Ferris are making use of the credit markets and borrowing some money. Digby, maybe to a lesser extent. The other, human teams or student-run teams, Baldwin's got a little debt, but the rest of you guys have been pretty reluctant to use debt, interestingly, or at least long-term debt, maybe using some short-term debt. Cash flow, we got different things going on. We can take a look at inventory and see some things that happened there. Digby had a huge increase in cash flow, so they had a lot of inventory apparently last round that they were able to get rid of this round. Might be one of the reasons why they had a pretty good round, because they did get rid of that inventory. Chester, on the other hand, went the other way. I mean, just about the exact same number, right, going the other way. So Chester ended up with a decent amount of inventory on hand. You can tell just by looking at this. These are pretty small amounts there, no big deal. Even the $14 million, yeah. Okay. Accounts receivable, don't worry too much about that because there's not a lot. You can do some things to control that, by the way, but not a bunch. But cash, plant improvements. Ooh, Baldwin's making a bold statement there. $32.6 million, so they're investing in some plant improvements. We might want to see what they're doing. Okay, Chester just a little bit, 5.3, but look at the Digby, 19 million. Look at your Erie and Ferris. Okay, look at Ferris, $58 million that they're spending. Okay, that they're investing, I should say, in plant improvements. Okay, and this is the team that had by far the biggest sales, and they're obviously putting a lot more money in. If I were a betting man, I would say based on their strategy that they're probably introducing maybe even some more new products. They might be increasing some capacity, and just because they're a differentiator doesn't mean that they're not investing money in automation, which they very well might be. Okay, dividends paid. Andrews and Baldwin each paid a dividend. Here we go. Sale of common stock. Look at that. So we've still got Digby, Erie, and Ferris all selling stock, and they're it's hard to argue because they are the winning teams. They've done the best, but I would probably take exception to that means of raising money, especially if I were in their positions. And we'll look at that. You got Digby, Erie, and Ferris down here. When we get down, look ahead a little bit on the cash. Ferris has got $57 million in cash. Erie's got $48 million in cash, and Digby's got $27 million in cash. Why in the hell would you be selling stock? Okay, if you've got that kind of cash on hand. I would be doing exactly the opposite, but that would be just me. So, also, the two computer teams issued quite a bit of debt, cash from long-term debt. So long-term debt, 25 and 26 million, probably has something to do with their investments up here, maybe. Right, they decided to make some investments in their plant, and so they decided to finance those with long-term debt. You kind of like to match those up if you can. From a banker standpoint, you would. Some retirement of current debt, cash from current borrowing, good. Okay. Huge net cash from financing activities, net change in cash position, huge for Digby and Erie. Chester kind of went the other way, but that's fine because Chester still has $22 million on hand. So you'd like to think that maybe they chose to make some investments and whatnot, and I think we'll see that they have in certain areas, just not in the plant improvements so much. So we come down again, look at the balance sheet. I like to just see where teams are at here sometimes in the total equity, because you can have a big team, Ferris, of $116 million in total equity. You can have a small team, Baldwin, with just $48 million in total equity. Now, think about the ROE. Okay, they can make half the profit as Ferris and still have a higher ROE. All right, so Ferris makes $10 million and Baldwin makes $5 million. Baldwin's going to have a higher ROE, right? Return on equity. And that's an interesting concept. You can actually, there's a strategy of going small maybe, right? Where you're just going to go small. You're going to have this small company that's going to be tight, well run, efficient, all those other things, and you can still have a high ROE. You really got to manage your stock if you're going to do something like that too, okay, to get your earnings per share up there as well. But we're getting to see a pretty good contrast here, from 116 million to 49 million here on the bottom, and everything in between really. So you got 49, 59, 71, 90, 100, right? So it's just about every $10 million we're seeing in terms of equity there. So that's really an interesting dynamic, I guess I'd say. Okay, I said Chester had invested some money. We just didn't see it up above in plant improvements. But look at here. Other fees, write-offs, TQMs, and bonuses. So we got $17.5 million that Chester invested. TQM is what that's going to be. We'll see when we get down below. Here's the contrast that I find interesting. Okay, and let's talk about this from a financial standpoint as to what's the difference here. We see that Team Digby invested $19.3 million in plant improvements here, and Team Digby or Team Chester only $5 million. But down below we see that Team Chester invested $17.5 million, Digby only $3.75 million in TQM. What's the difference in terms of the income statement? You guys got any idea? If I'm investing in plant improvements, what happens on my income statement? Is that an expense? No, it's basic accounting. It is? So if I buy a new plant, a new building, do I expense that? Do I get to write that all off on my taxes that year? Or do I have to write that all off on my taxes? What do I do with it? A new plant or a new big piece of equipment or something like that? You guys that are in entrepreneurship should know this too, right? What am I going to do with that piece of property? I'm going to depreciate it, right? Okay, so I can buy a $100 million. Okay, it has not a large effect on my income statement for that year. Okay, the only effect that's going to have on my income statement is a small increase in depreciation, relatively small increase in depreciation, right? If it's plant, if it's a building. If you guys remember looking at the depreciation tables, I might be depreciating that off over 25 years, right? So if I'm buying a $100 million plant, it's going to affect my income statement by $4 million. 25 years, that's roughly, if I'm using straight line depreciation, and I think that's kind of what they're using here, right? Take 100 million divided by 25 years, I got $4 million per year. So I only have a $4 million write-off, okay, that affects my income when I'm looking right here.
And that would be an increase, not a decrease, right?
That would be a decrease in my income. Okay. And again, though, on a taxable basis, though, I could say that would only affect me to the tune of about 2.7 million, right, on a taxable basis, because that would lower my taxes then somewhat. Okay. TQM, on the other hand, TQM is a direct expense. Okay. I'm writing that off. It's total quality management is what it stands for. You'd probably go read some Deming. Deming's a really good writer about quality management. He came up with I think the concept of total quality management. Really interesting stuff. Okay, him and Peter Drucker. I'd recommend Peter Drucker too for reading any old time. Peter Drucker is really kind of futuristic, and he wrote some pretty cool things. Management in the 21st century was a good one. But TQM is an immediate write-off. So if I invest $20 million in TQM, how's that affect my income statement? It directly affects my income statement. It reduces my before-tax income by $20 million if that's what I invested, right? Okay, so I can look at this round and I can say pretty confidently that Chester would have won if they would have not chosen to invest this kind of money in TQM. Now, that I shouldn't say I could say that confidently because I can't, because their investments in TQM also created some savings that I can't account for, without doing a whole bunch of math. Okay, their investment in TQM probably created some sales increase, some demand increase for their products that I can't account for without doing a lot of pretty extensive math and some things like that. So it's tough for me to say exactly, but if I look at just the raw numbers, okay, let's look at the, man, if we got sales, variable costs, I wish they had this another couple deals in here because I could look at our gross profit. So our gross profit here is 60 million. Our gross profit here is 56 million. Digby has a lot more depreciation, so our gross profit here would be about even. Our SG&A was just dead even, right? So our gross profits would be even, but 17.5 million versus 3 million. So my gross profit just flipped up by about a $14 million difference there. So they would be about dead even if I could use the raw numbers. Okay. So Chester made a bold move here by investing in TQM. Okay, it hurt them this round. Okay, there's no getting around that. It hurt them this round. Digby, on the other hand, chose to make some investment up here in plant that was pretty big, equal to the investment that Chester made in TQM, but they only were affected right here on the depreciation side. Okay, so their depreciation went up a little bit. And I'm not sure how rapidly they're depreciating things in this game. I don't even know if they tell us what the depreciation schedules are, those types of things. So it's a whole different thing. Now, I don't know where Digby invested their money. I can figure that out, but I don't know just off the top of my head where they invested that money. But that would be interesting to know. Okay, both of those, if Digby invested it, say, in automation, just in automation, okay, that's going to cut their costs big time. Right, that's going to cut their labor costs in big time, right? Okay. Now, I can look at where Chester invested their money, and I can look at Digby too. It just takes a little bit of looking, but I can look at Chester and say, man, they invested $17.5 million, way more than any other team, and they invested it in TQM, and we'll see when we get to the bottom what the effect is for the upcoming rounds. So, and it can be fairly dramatic. So we'll take a look. Okay. Again, you've got, look at that. I'm kind of wondering if Digby, look at that. I mean, they're investing. They got a lot of capacity there and not much production. That's kind of interesting. Chester's taking the approach that they're going to use their capacity, as is Erie and Ferris. So that could be interesting. So Digby's paying. Maybe that's why they sold stock, because they're paying for a whole boatload of unused capacity there. I don't know. Andrews has all kinds of capacity too. Baldwin, quite a bit of capacity as well, but that's a really excessive amount of capacity. Now, they're not paying overtime. Probably they might be in certain segments, but for the most part, they're not paying overtime, which in some ways saves you some money. But again, I'll refer to the real winning team here, Ferris and Erie. Okay, and they're paying boatloads of overtime, and they're still kicking butt, right? Okay, because they're not paying for unused capacity.
Could that have been because they had inventory on hand, though?
For Digby? For last round? That could be. Yeah. The question here was, did they not use capacity because they had a lot of inventory? And that's very possible for this particular round, so it could vary. Next round they might have to crank it up again, so they might not have sold stuff. Yeah, that's a good point. Some inventory stuff going on here. I think I got a question about Adam. Okay, I think I have a question about Adam in your homework assignment there, because Adam, I looked at that and I said, boy, what an orphan there. Wow, that poor guy, Adam. He's just kind of hanging out there. What the hell's he going to do? He can't sell himself. He can't. Yeah. So I think I got a question about Adam, so I'm not going to refer to Adam just right now. Bid and bold, they got me a little bit, kind of wondering too. I can see bids going away because bid's down to one item, so bid's going away. That's fine. Bold, I haven't figured out. They didn't sell any, and they don't have any in inventory, so they're all out of it. But they still got 400 units of capacity. It's kind of like, So I would guess that bold's probably going out too. I don't know. Guess we'll see. They didn't sell any. Part of the reason why Baldwin has maybe plenty of capacity, they don't have a whole bunch of excess like some of the other teams, but because they're still hanging on to that capacity there for bold that they're not using. So interesting. Okay. These are things. This is part of the whole game. When you're doing some stuff, it's making sure that you make every single decision in every single segment, and you do it just right. Otherwise you end up with an orphan like Adam. He's running around here, doesn't know what the hell he's doing, or you end up with bold where there's no bolds out there, but I still got this plant sitting out back that I'm keeping heated and the lights on and all that other stuff. I got to pay taxes on it and everything else, and I'm not using it. Yeah, I guess the guys go play basketball on their break out there or something, but I don't know if I need to pay for them to do that. Digby, look at that. Some new products going on. They might have spent some money, some additional money here, introducing some new products. They've beefed up this fairly dramatically, their automation. Okay. Interestingly, they've got these new products, but they've only got a little bit of capacity there. Okay. They produced at full capacity and sold at full capacity. I'll tell you guys, it's probably important to know, and it's worth telling you that, when you introduce a new product, there's a hype. Okay, there's a big hype. Think of the Apple iPhone 67 or whatever we're on now. Okay, and when it comes out, people are standing in line. Apple doesn't have to pay a dime for advertising, right? They're getting all kinds of publicity. There's just, my computer screen's just full of all kinds of crap when Apple's coming out with new stuff. And it's not advertising. It's just companies, Newsweek or USA Today or whatever, writing stories because the new Apple's coming out, right? So Apple gets all kinds of free publicity and people are standing in line, and it's going to sell a gazillion of them just because it's new. And that's what would happen when you introduce a new product. Digby, I'm a little scared here because they introduced a new product, but they only had the capacity to build 50 of them. So people left wanting, right? There's a lot of people out there that probably wanted to buy some more of these, and wasn't there. We might be able to find that out when we go down below, when we look at the, I think it breaks it down. It just breaks it down by segment. Shoot, it doesn't break it down by product when we look at the actual and the deal. It just breaks it down by segment, I think.
So could you also say, since they introduced the new product, like you said, there's a big hype, so there's a big hype about it, but then at some point doesn't the product then enter like a standstill? Like after a while, like...
The question was, when there's a big hype over a new product, then does it enter a standstill? Each new product like that goes through a phase, just like we see the life cycle. And we're talking about a high-tech thing here, so some of these phases go pretty quickly. So you've got introduction, right, is the first phase. And then you've got that real growth phase, and then you do hit a maturity phase.
Yeah.
How long does that take in our game? I don't know. Part of that is Apple. I mean, the Apple iPhone 5, that's what my wife and kid just got, I think, was an iPhone 5S or something. I have no idea. Okay. That's certainly in the mature or even declining stage. But they still kind of refresh that and keep that kind of newish, and they still sell a whole boatload of them, believe it or not. And so it's the analogy of that to our game here is not a bad analogy when we're looking at cell phones or smartphones like that. So yeah, it gets through those phases, and at some point in time, if it's not really refreshing, it's going to become more of a traditional. It probably is now. The 5S is probably more of a traditional. But look at where all your sales are. I mean, they may sell more 5Ss than they do 6s. I don't know. Yeah. And then it's going to become the low-end product that's going to be hanging out there, that old guys like me might have an interest in. I doubt it because I can't run them, but, right? So it'll still sell some. And it becomes a cash cow at that point, too, because they don't have to invest in new technology. They don't have to do a lot of that stuff. You know, maybe they can integrate some of the new stuff they're doing for their other phones back into it, but that's really cheap to do. So, okay. So then it does become a cash cow. But yeah, it loses its luster, but that's where the marketing and those types of things come in too. So, okay. We know what Erie and Ferris are doing, right? Looks, well, they're new. That's been out for a year or two. And they spent a lot of money. You know, Ferris spent a lot of money. I might have to go back and look. I don't think, you know, their automation has really jumped up huge. I don't think their production capacity's jumped up huge. I might be guessing that they're going to be introducing another new product or two. I just might have to guess that, because what do they got in plant improvements? 58 million or something like that? That's a lot of money. And we'd go look. I need to look at the automation and the production. If I went back to last round, I could take a peek and see. It may be somewhat in these areas, but 58 million is a boatload of money, right? So I've got to guess that they're going to be coming out with maybe some new stuff. So traditional segment, I'm not surprisingly, Erie's kind of dominating. You know, they've set themselves up. We know that they're a low niche, low cost niche, right? So they're going to try to dominate there. It looks like they had more potential than they had actual, so they didn't even make enough, apparently, of at least some of their products. And Ferris is about out of that market, right? About out of the traditional. Remember I said that their product that was a traditional product, it's going to be here fast. It's sold 155 units, but it's on the border there. It's just about to flop over into a low-end product, and I think they're positioning it to become a low-end product, right? So we're just going to have five teams that are competing in the traditional segment, probably more products than that, because probably all the way down. Eats maybe still valid. Eat might be going to the low end too, because it's right there with Fast. Look at that. So it might well be going to the low end as well. If I had to bet, it is. So we're still going to have 1, 2, 3, 4, 5, 6. Oh yeah, Echo and Egg are the two from Erie that are still in that. Yeah, and they sold out. Okay. Low end segment. Andrews does well in the low end. Ferris is still doing well. Okay, partly they probably got two products in there now. They got one that's kind of leaving and one that's just coming in. So that's part of the reason. Erie's still fairly dominant. The rest of you guys are just kind of picking off what you can. Pricing, it's always kind of cool to look at. Looks like Team Andrews fairly aggressive in pricing, and they sold out. Did they miss out on a bunch? Yeah, not a bunch. They missed out on a couple, 2.5%. It looks like maybe the market. So not huge, but you gave up a little bit of money there. Okay. And at $18, that's what's pushing it. I think one of your questions is going to be in regards to their material costs for their low-end products. So let's see. I guess might have to do a little research on that. Boy, we get to the high end, and who's dominating? Wow. Andrews, Baldwin, Erie have left. We know that Erie's left. Baldwin had a little potential. Looks like they didn't meet it. And Andrews, you know, they're showing up there, but I can't tell if they're above the 0 or not. Erie's not. So Chester Digby picking up some scraps that Ferris is leaving him. That's about it, right? Probably tough at this point, although Chester may be in a position to move their single product forward a little bit because of their investments in TQM. Their cycle time's been reduced, so they may be able to make some movement there, some progress in moving that product. We'll see. When we get down to the TQM, take a look at that. Again, performance, Ferris just dominating, you know, picking up. Oh, look at that. Baldwin, though, had potential here. So you guys had a product. Is that the one that you didn't make any of? Look at that. You could have had 12% of the market where that product was sitting without even hardly doing anything. And you know, that would have been a pretty huge thing. So Digby gave up quite a bit of the market here, right, in the size. Digby could have had close to 35, and they ended up with just a little over 20. So they gave up 13, maybe % of the market, something like that. So they could have sold another. What would that be? 500,000 units, something like that. So pretty big deal. fume's still dominating, or the ferrous is still dominating in those areas. So, well, they do give us, yeah, they do give us here by individual, right? So we were looking at the two there for Digby. Their high-end product, this is the actual and this is the potential. So their high-end product deal, they had a 2% actual. They could have had a 4.6%. So they gave up, they just left 2.6% of the market, okay, on the table. So they could have, without doing anything more really, sold quite a few more. And in the performance, or whichever one Ding's in, they gave up 4.2% of the market. That's pretty big for a single product. Yeah, that's pretty big when you give up 4% of the market, 4.2% of the market for one single product. So they left some money on the table, did Digby, by not having the right kind of capacity and producing to that capacity. So kind of interesting. Now, this gets a little bit complicated because you'd also have to look at what else Digby had. Maybe they had some other products that took advantage of that. Does that make sense? Because they obviously, they have, in this category, Dixie 21.8 actual, and Dixie's potential was only 18.4. So while they gave up 2.6% of the market here, they made it back there, right? So they were the beneficiaries of that. But you don't know if they could have stolen even more market share from some other teams. So it's kind of, these are good numbers and they're kind of cool to look at, but there's other scenarios that could have come into play if they had produced more, right? They may not have had quite the same market share up here with their Dixie, though. I mean, you'd have to think that they could have cannibalized their own product a little bit. So perceptual maps, interesting. Again, we see really just a couple teams, 3 teams kind of competing up here. That's it. Bold still in play there, but not a whole bunch. Bids down in the traditional segment now. So we really have got 3 teams. Still quite a few products though, because Ferris has introduced new products here. Digby's introduced new products in a couple different categories there. So HR, we're really starting to see some. Look at that, 9% productivity for Baldwin, 5.5, 6. 2 and 4, so we're starting to see some productivity gains. Those should really start showing up in some of the labor costs. Okay, and sometimes it's when you're also investing in automation and you're investing in TQM, like we'll see here with Chester. Sometimes it's a little difficult to pinpoint it and say, you know, well, that's what it was, but it's a combination. Okay, remember Chester invested a ton of money, way more than any other team. Baldwin was next closest, but still about half of what Chester invested. But what's Chester going to get out of that? They got in this round, it started in round 4, and keep in mind this will continue for the rest of the game. Now, we only got one more round left in the practice rounds, but what happens when we get to the competitive rounds? Okay, a 7.5% cut in labor. What would be Chester's total labor? About 50 million? I'm just kind of guessing there. So they saved $3.5 million in labor, an 8% reduction. I'm sorry, 7.5 in material. Their material and labor costs are about the same, so 50, 60 million, somewhere's in there. So let's say 100 million, and they saved about 8%. So they saved $8 million. So out of that $17.5 million investment in the first year, just between those two categories, they should have got back about half of that. Not quite, but figure about $7-8 million that they got back in labor and material cost reductions that they'll get next year. They don't have to invest the $17.5 million again. They might, and that'll bring these numbers up even more. Okay, so they've got back that much money. They'll have full cost recovery by year 2 probably on that investment. Reduction in R&D cycle time, 40%. So when I said, remember, in the high end, they can maybe get up there and start challenging Team Ferris, right? Because they're going to be able to move their product quite a ways along that line. Baldwin can too, with 30%. Reduction in an admin cost, 43%. You got to actually go to a different financial statement. You guys get it, your annual report, and you can see what your reduction in admin costs means. Your admin costs aren't that huge. I'm guessing total admin costs are $3-4 million. So you're going to save them $1.5 million, by saving 43%. But again, that adds up. You saved $8 million up here. You don't really save money here, but you get the benefit of being able to move, and you'll save some in R&D. Okay, so now you're up to about $9.5 million. So truly half that you're getting back that first year, and then a demand increase of $11.6 million. So we saw Chester had reasonably good sales. Okay, and even though they have prices that aren't the lowest by any means, they still had reasonably good sales, and part of that might be attributed to this increase in demand. And it's hard to put a number on that then as to how much that helped offset the $17.5 million investment. So huge investment, but the returns come back pretty quickly. And not only that, again, these numbers, if Chester doesn't invest a dime more, these numbers are going to stay the same for the rest of the game. Okay, we just got one round left in practice rounds, but again, if we got competitive rounds, they're going to stay the same for the rest of the game. Okay, and Chester might choose to invest more, which could even improve those numbers. Okay, so TQM, yeah, it's interesting to look at some big numbers like this and see the impact, you know, that it may well have had. Okay, so let's take a look at this week's assignment. See what I put on here. I forget sometimes. Well, there we go. First question, why can't Andrew sell its high-end product? Or why won't they? Or why didn't they? Or, okay, might be better. Why don't they sell their high-end products? So why is Adam an orphan? Why hasn't Adam sold? Why is Adam just hanging out there, wandering around in the desert, wondering what the hell he's going to do next round? Okay, find out. Okay, because Adam's got 200 in inventory, I think, 200,000 in inventory, and it only sold 40,000. So it sold a little bit, but I'm asking why, you know, why didn't it just sell out? Okay, what happened there? Okay. 2, what explains the difference in contribution margin between acre and ebb? Okay. And don't just tell me that, for example, material costs are lower. Okay. I mean, material costs may be lower, labor costs may be lower. I can look and I can see that. What would have caused material costs to be lower? Okay, this is where I'm going to start pushing you. I want you to start digging a little deeper. What would cause, you might have to go get your guide out, you might have to look at material costs and what affects material costs, right? Okay, what causes material costs to be lower? What can cause labor costs to be lower? So what things maybe has acre or ebb, whichever one, ebb is I think the lower cost one here. What things has ebb done or Erie done to lower their costs, both on the material side and the labor side? Okay, so I've already given you the basic answer. Yeah, their labor and material costs were lower. So I've given you that, so don't even bother putting that on there, right? Unless you want to use it for a heading and then tell me the things underneath that, right? If you don't tell me the things underneath that, 0, okay? 3, in the size segment, how much money did Digby leave on the table in sales? So I'm asking you to take that calculation a little bit further. Last assignment, we said that there's 5.3%. I think it was Chester or somebody that left some sales on the table. Now tell me how many dollars, okay, how many dollars then they left on the table, okay? And so just quickly, you know, let's look at some math. I'm going to just go up here to the low end and show you how I do the math in my head. I expect you guys to get your calculator out. But let's say that I left 10% of the market share in the low end and my price was $20. So 10% of the market for last round would have been 1.4387 million, right? And if my price was $20, I would have left 28 point some odd million dollars on the table in sales, right? Okay. Your guys' math won't be that easy. You'll have to go in, but you go down below where it's got the actual versus the potential, get the actual percent numbers down there, multiply it by the demand from this last round, round 4, multiply it by the price, and there you have it. And I think I put on there, I'm not going to give you hints on this, but I'm going to give you maybe a little extra credit if you calculate the profit it left on the table before tax and or after tax. And in that case, I want you to kind of show your work. You should show your work on all of these. if I got a little bit of math in there, you know, put the equation down that you're using. That way I can see if you made a small error, you know. Sometimes you might just write a number down wrong or something, and I won't be as mean, as cruel in my grading if you just wrote a number down wrong, okay? Ooh, last question. What team's going to win the final practice round? That would be which student team I should put on there. And in fact, let me just correct that right now. So is that one really going to count if you get it wrong? Yeah, no. Okay, but might count a little bit if you get it right. How's that? Any questions? Okay, we should, hopefully I will remember to send stuff out today so that everything's back due again Tuesday. Okay, so we can get all your assignments and stuff in by next Tuesday. Assuming I remember, please, if I forget, if you don't see stuff from me by the end of today, please feel free to send me an email. Because for one, that we don't have class on Monday, we don't have school on Monday, and so, you know, if I don't get this done today or tomorrow, then God, it'll really be screwball. So, Trevor, yes, you should send it to me. You know, you're trying to get out of it, trying to delay it. No. Okay. So if I forget, go ahead and remind me. No worries there. Any questions? Comments? Who's going to win round 4 or round 5?